cropping up in the data as transport modes shift, and he's staying bullish on the sector. Joining me now is Donald Broughton. He's principal and managing partner at Broughton Capital. It's good to see you, Donald. And of course, this is of more importance than just stocks like FedEx. This is really of importance for the whole economy. So what are you seeing?
It is, Kelly, and it's always good to see you as well. Here's what's going on. First of all, there's some delayed seasonality. Normally, January is weaker than December, and February is weaker than January, but that's not what we saw this year. January was up over December levels, and February continued to be strong. It really wasn't until the end of the first quarter that we saw some tail off in seasonality. So this may be just delayed seasonality, or at least part of it is. One. Two, if you look at what's out there on spot market versus contract market, the contract market's fuel surcharge resets once a week. Spot resets every single day. So many people have been trying to use as much contract as possible and as little spot as possible, because that way they don't have to pay. They essentially avoid paying some of the fuel surcharge, legally. And so that creates more softness in spot than you would see otherwise. But the biggest factor really is mode shift. When diesel goes from being $4 a gallon to over $5 a gallon, the break-even point of when you shift from over-the-road truck to in domestic intermodal goes from over 600 miles to literally down to 450 miles. And that shows up as a little bit of weakness in dry van truckload, but big boom in demand for the domestic intermodal players.
Interesting. And so fortunately, we are heading right into earnings season. So you think J.B. Hunt and MRTN are going to, now when people come out and say they're going to beat and raise, you say they're going to beat and raise. What are they going to tell us is really going on in the transport sector?
Well, since they have both trucking business and logistics business and intermodal business, they see all of these moving pieces. And so they're going to say, look, yes, maybe our dry van truckload business is a little bit weaker, but we're seeing a greater pickup in our intermodal business. And essentially what happens there is they get pricing power because they shadow price the over-the-road competing service, but their costs don't go up as much. So their pricing power per load may be going up as much as $1,000 per load, but the costs only go up, say, $100 per load. So you get not only increased demand volume, but you also get increased margin. And that's dry van. You also look out at, say, flatbed or reefer. Those businesses are doing extraordinarily well. They're not only not seeing weakness, they're seeing increases. So the first two truckers out there to report will be J.B. Hunt and Martin. And both of those are going to say, weakness, what weakness? We don't know what you're talking about.
Well, I certainly hope so from the broader economic point of view in particular. Donald, thanks for joining us and really laying this out as we head into the stretch.
Always a pleasure.
Donald Broughton. That does it for The Exchange.